Good afternoon, everybody. Welcome to my video update. Today's Thursday, July 26, 2012. Having a couple computer issues, so I need to keep this one quick. Looking at the markets, we're still stuck in a trading range on the S&P between about 1320 and 1370. Until that breaks, I just don't see the market doing too much. Hopefully we'll break it to the upside. I thought we were going to do it last week, but then the market had the last 4 out of 5 days, the market was down. Finally, that is going to be reversed today pretty meaningfully, so we'll have to see what happens. Looking at the economy, things have been pretty interesting. We've got a lot of corporate earnings, and the corporate earnings, some have been pretty good. Like a company I didn't expect to hear good earnings or guidance from was Caterpillar. They ended up being pretty good. A company, however, which has always given us great earnings, Apple, disappointed, and their guidance was disappointing. That, along with companies like UPS and McDonald's, we just need to be, we need to be concerned. There's an old saying in Wall Street that the smart money follows the bond market. And if that's true, I mean, the bond market is telling us a very different story than the stock market. The bond market's really telling us, you got to be careful. Take a look at the 10-year note. The 10-year note, which has never yielded yielded levels at like 1.4% yields and below, which right now it's about 1.4, and we haven't seen these levels since the 1930s. So we really need to be careful right now and watch close notes of that, because it is showing signs that there's a lot of fear out there. We're going to just have to wait and see, and we'll make the appropriate moves. Another reason we're seeing fear is, even though the market's up 200 points today, the leaders are utilities. Utilities never lead in strong markets because they're more of a safer play. Finally, looking at our accounts, one of our best trades we've made in the last couple months has been utilities. Besides the 4% dividend, our appreciation right now has been great, and the fund is actually at like a high we've been seeing since 2007. Other highs we've seen are in corporate bonds, the agency bonds, and our emerging market debt. All three of those positions have hit all-time highs over the last couple weeks. So we're going to still keep holding them along with our dividend plays, and when the time comes, we will get back into the other assets, some of those being international, but I'm just not going to do it until things look clear. With that, I have to keep this short just because my computer problems right now. I've had to videotape this like 6 times, and I'm hoping this will be the last one. With that, though, have a great weekend. Contact me with any questions, and as always, I'll do my best for you, and thank you for being my client. Have a great day.